It is day 4 of the Singapore FinTech Festival 2020, and it is all about investment. Our next event is the second part of the FinTech Demo Day segment. In the first session during the Asia Hub, we heard pitches from 4 leading FinTech startup companies. Now, the second session will feature another 3 more companies. Doconomy, which is an impact tech startup that's fighting climate change. Hello Tractor, and that's how farm equipment can be monetized, and ZigZag, specializing in logistics, are all going to be presenting. We'll go over now to the FinTech Demo Day presentations and pitches.
Hello everyone, and welcome wherever you are in the world to this session from Mastercard. My name's Neale, and I have responsibility for Mastercard's Start Path programme, our startup engagement initiative which selects the boldest and brightest fintechs from across the globe, supporting them to scale with Mastercard technology, expertise and access, and also partnering with them to uncover opportunities to innovate together. We were delighted to be invited by SingX to contribute to day 4 of this incredible festival of all things fintech. Over the course of the day, we're bringing 3 sessions to the stage, all of them addressing the ways in which fintech is solving real problems that exist in the world. Fintech founders are typically mission-driven by nature, and given the cataclysmic changes that have affected so many in 2020, which in turn have seen an acceleration of fintech in use, our overarching banner for our contribution today is FinTech for Good. Our goal is to provide you with insights on critical fintech topics and also to introduce you to some of the best fintechs in the world addressing these areas. This session focuses on sustainability and the ways in which fintech is enabling people and businesses to spend, invest and borrow in more sustainable ways. The challenges of sustainability are increasingly becoming a focal point for companies of all sizes. And at Mastercard, our Provenance solution is introducing efficiency into supply chains. Our Priceless Planet coalition is dedicated to planting 100 million trees. And our banks are able to issue cards made from recycled, bio-sourced, chlorine-free, degradable and ocean plastics. We've been excited to partner with FinTech in our own efforts and to see what's emerging elsewhere in the space. We carried out research this year in collaboration with PitchBook to understand where smart money is being invested in fintech. And the nexus between fintech and sustainability, although it's still at somewhat of a fledgling stage, has seen increased investor interest in recent years. And at the aggregate market level, the investment in 2020 in fintech and sustainability has been at its highest on record, with total capital invested this year at close to $2 billion. So what do we have in store for you today? Well, as consumers demand the ability to make more informed, impactful choices, trust is a key ingredient. So in just a moment, we will kick off with a fireside chat between Mastercard Senior Vice President Deborah Barta, who leads our Provenance solution, and Rachel Botsman, an academic and expert known for her work on the sharing economy and consumer trust. Through the Start Path programme, we've had the opportunity to work with a number of fintechs that are addressing the issues we face in sustainability. So after we hear from Deborah and Rachel, we will introduce you to 3 such companies. Doconomy from Sweden, Hello Tractor from Nigeria, and ZigZag from the UK. But for those of you in the audience who are less familiar with Mastercard Start Path, let me share a short video to provide more detail, after which Deborah will take the reins and host Rachel in a fireside chat.
Hello, everyone. You are in for a treat today. I am excited to be able to moderate such a fascinating and relevant topic And I suspect you already know our guest speaker, but allow me to do a brief introduction to level the playing field, as we say. Rachel Botsman is the leading expert on trust in the modern world. She's the Trust Fellow at Oxford University and the author of 2 groundbreaking books, What's Mine is Yours and Who Can You Trust? Her work regularly appears in leading publications, including the Financial Times, Wired, the New York Times, and her TED Talks have been watched over 5 million times. She was named a Young Global Leader by the World Economic Forum, one of the most creative people in business by Fast Company, and one of the top 10 most influential voices on LinkedIn. I'm absolutely delighted to talk to her today about why trust is at the heart of interactions, including financial services. Welcome, Rachel, and thank you so much for joining us today.
It's a pleasure. It's great to be here.
Outstanding. Let's get started. We have a lot to cover. So if you think about this year in particular, your area, trust and the work you've done here matters now more than ever. As we think about the global impacts of the pandemic on consumers and brands, and you even speak about how trust enables change and innovation, how do you think trust has changed over the course of 2020?
I don't think that the nature of trust, what trust is, has changed. I think what's shifted is people's appreciation of its value and the fundamental role it plays in business and society. Trust really sits at the heart or the foundation of products, systems, ideas, and culture. It's not something that you can layer on through a communication strategy. The very essence of trust, or the way I define trust, is that trust is a confident relationship with the unknown. So if you want people to trust a product, if you want people to trust a policy, if you want them to trust a company, they have to have confidence and faith in the unknown. And that comes from culture. That comes from the way people behave. It comes from whether people believe that you are trustworthy. So the biggest shift that I've seen in 2020 is people realizing that you can't just suddenly build trust. You can't suddenly just demand trust. It has to be there at the core of what you're doing. It has to be there at the heart and the foundation.
You know, that couldn't be more relevant. And the way you say that, it makes something that people could say, trust, confidence, sure. No, I know the brand. I know what to expect. But the reality is, in today's world, that I feel like that paradigm has shifted, and earning that trust is even more important. And so let's take a step deeper into financial services for a moment. So if I look at our world and Mastercard, trust is paramount. In the world of the provenance work that we do, bringing visibility end to end in supply chains, leveraging blockchain, our goal is to build trust. If we can build trust between parties, it can really open up new efficiencies, partnership possibilities, but it only works if it's fundamental to every transaction. So when we think about financial services specifically, and especially in light of open banking and the pandemic, what's the role that trust plays in financial services?
So financial services are really interesting when it comes to the link between trust and innovation. So we often don't think of the role trust plays in enabling us to take new risks, in changing our behaviors. This is what I call a trust leap. Whenever you're asking someone to take a risk, to do something new or to do something differently, that is what we call a trust leap. It's not possible to place our faith in something new or different without trust. And financial services are the sector that are full of trust leaps from the beginning of time. If you think about when people switch from bartering to money, that was a trust leap. If you think about the first time you put your credit card details on a website or use an ATM, that's a trust leap. So blockchain it's different, but it's another example of a massive trust leap in financial services. It's saying to people that we can do things differently. And if you have faith in this new technology, it can transform the way value can flow. It can transform the way that we can trust one another. And I think what's really interesting about the work that you're doing around the blockchain is it sums up what we're seeing with financial services, is that this is an industry for a very long time that has been focused on money. And money, of course, it's an important currency, but money enables you to transact. Trust enables you to interact. And so what we're seeing with all the innovation around the blockchain is this mergence between interesting examples of the transfer of value that are changing the way people can interact as well. And that's what I think is so exciting about this space, is it's this interaction between transactions and interactions that trust makes possible.
And to that end, you talk about technology and also the trust stack and moving from, initially going through the processes. Take us through the steps of the trust stack, because I think there's so much relevance to it when you speak to it that way.
Yeah, so I have to admit, so the trust stack was something I developed over a decade ago around the work in the sharing economy, and I got it slightly wrong originally. So I thought of it as 3 layers. And the 3 layers that you have to have is that you have to have trust in the idea. People have to understand the idea. What role does it play in their life? What can it bring to them? The next layer is you have to have trust in the technology, the system, the brand, the thing that's delivering this thing. And then the last layer is trust in people, however that works, trust between supply and demand on both sides of the market. Now, the thing that I got wrong was I assumed it was kind of a linear thing, right? So trust in the idea, and then trust in the technology and the platform, and then trust in the people. And it doesn't work like that. It's far more fluid. And one of the things that we've seen over the last decade is that trust in the people, whether that's the community of users or the people delivering the service, that now is the most important thing. You can have the very best technology, but if people don't believe in the company and they don't believe in the community of users, that's where trust breaks down. And so this is really interesting to me, that when you look at many trust fails over the last decade, they weren't always because of tech reasons, they were because of trust reasons, that people didn't believe in the culture and the behaviors of the people.
Right. Okay. And we'll dive into that in just a little bit. This is fascinating. There's so many different angles here. So let's dive into sustainability for a moment. So if you think about consumers aligning more and more their purchasing against their values and in line with, I shouldn't say against, it's really in line with driving for ethical choices, et cetera, as they're at the point of sale. We've also seen the waves of both entrepreneurs and executives leading companies with, increased sustainability efforts. So if you think about our audience today, banks and brands, and even now startups that are coming to solve for some of these challenges still need to create and offer what consumers want. So, referencing your predictions on the sharing economy now over 10 years ago, what can we really learn from sharing economies? What do consumers want? What do we still need to deliver? How do we think differently in this new space?
Yeah, I can't believe it was over 10 years ago, to be honest. I first started writing that book in 2008, and I remember sending in the manuscript and my editor saying, you can't open with the story of Airbnb because the company will be dead by the time the book comes out. The first page is all about how big Airbnb had got. It was around 10,000 properties. So it is amazing how much that space has grown. But what I always believe is you go back to the core principles, right? You don't just look at the examples. It's like what really sits underneath these platforms that made them so powerful that consumers really wanted. So the first thing I think is really important relates to supply and demand. That what we saw was that consumers said, I want a more direct connection with the supplier. And you see this in everything from marketplaces like Etsy to crowdfunding platforms like Kickstarter. I know that Mastercard is involved with C-Note. That's a great example where it's like, I don't just want to place money in an investment fund. I want to know where that money is coming from. So we really saw this transformation in the relationship between the producer and consumer, and people saying, I really want to understand that relationship and where I'm spending my money or where my products are coming from. The second thing that was really core to the sharing economy was this principle of unlocking idling capacity. Now, idling capacity is the untapped social, economic, and environmental value of underutilized assets. Right, so a great example is the car that sits there 23 hours a day, but we're surrounded by idling capacity. There are assets, whether that's physical products, whether that's people's time and skills, or whether that is money. And what we can now do is use technology and make that capacity liquid in ways that we've never seen before. And that, of course, is great for sustainability because you're taking an asset or resource and you're maximizing efficiency from it. But it's also new ways to create value. The third principle of the sharing economy that I think is really relevant, particularly sort of in the realm of sustainability and what sustainability means today, because it's different from what it meant 10 years ago, is this idea of trying to find smallness within bigness. For many consumers, systems have got too big, the food system, the education system, the financial system. And so what they're looking for in new offerings is this smallness within a big sort of ecosystem, a way that they can understand, again, where their products are coming from, how they're being made, and feel like they have closer contact with that provenance and with that company. So this is a huge shift when it comes to trust. When you think of financial services that you associate with big institutions and big brands, that consumers now saying, actually, no, I want a more direct connection.
And that's so interesting because, you hit on the topic of human interaction. People are craving, especially now, meaningful connections that are relevant. And the cold transaction is yesterday's news. People want to be able to feel like they're working with an identity and as a more emotional, relatable person on the other side, which is fascinating. So that takes us then to the topic of partnerships. When you think about this audience today, it's a wonderful mixture of fintechs and innovators and established banks and across the board looking to address these types of problems. The topic of partnership is super relevant. When you think about meaningful connections, in the ingredients of this have to include trust. We think about the business relationships, the human interactions, and as well, some of the startups we're going to hear about today, all approaching it from their own respective angles. Are there opportunities for new entrants in the space? Tell me a little bit about partnerships in general. What's next?
So just before I go there, Deborah, you said something that's really key, which is this shift between financial services that are purely built around efficiency. Now, I'm not saying that, creating services that are friction-free and feel really good to the consumer isn't important, but in many instances, sort of efficiency took the place of trust. Efficiency took the place of that personalized interaction. This was one of sort of the unintended consequences of mass digitization. Now, it's not that we don't want to do things with speed and on demand through an app, but what we're missing is that meaningful connection. So I think this is the first opportunity. What replaces the bank manager? Who is that guide, that financial guide in your life that you feel like you really know? Can that really be provided through a pure digital solution, or are people hungry again for that meaningful interaction where you feel like someone genuinely understands what's going on in your life and that they care about you? So this is space one, which is old-fashioned financial services, right? This person that really understands your life and that you feel like they genuinely care about you and the financial decisions that you're making. The second space that I think is really interesting and is a huge opportunity, and I'm very passionate about, is people that, for lack of a better word, we would traditionally call untrustworthy, right? That if you put them in a traditional financial system and that they were assessed by a FICO score, they wouldn't be able to get a bank account, they wouldn't be able to get a mobile phone because they wouldn't have a credit history. I experienced this as someone that has moved from 3 different continents over the period of 20 years. Like, you're like a ghost in the system. So how do you use all this financial data, behavioral data that exists in sort of our mobile interactions, our social interactions, to be able to offer financial services to people that we may traditionally call untrustworthy just because they don't have a credit history. And there's wonderful examples of this. So Tala, who are starting to do micro lending, I know that you guys are involved with Juvo. These are examples of taking signals, trust signals, that are really good predictors of how someone might behave and being able to offer them money in ways that can transform their life. If you ask me what is the biggest opportunity, it's that. Like, how do you take this unbanked sector and actually prove that they are trustworthy? The last is interesting, and I think it's a space that's just starting to emerge, which is areas of banking and financial services where there is very low trust, where people do not have confidence or faith in the system. And you can look at examples like Lemonade in the US and what they're doing around insurance. And you can look at examples like TransferWise that, now have been around for over a decade, but they took this area of international transfers where there was very low trust and transformed the experience. And what sits at the heart of those ventures? What is at the heart of their proposition? The way they design the product and service, the way they think about customer support, every single touch point, everything in their culture is driven by trust. In saying, we want you to feel different about this company, we want you to feel different about every interaction, and we want you to feel different about us. And so these areas of low trust, the most important guiding principle from a design perspective, but also from a values perspective, is integrity. Financial services that can actually say, you, the customer, your interests are aligned with our interests. In every decision that we make, we say, are our products and services, are the decisions that we are making, are they in the best interest of the customer? And that also is a massive opportunity space that we could dive into.
So you've spawned a couple of thoughts here. So if I look at the evolution of how some of those sort of mass efficiencies came to play, it was due to saving costs and applying your product or service to meet the masses. So what that meant was all of those underserved or ghosted folks in the system end up getting eliminated because they're a rounding error in terms of they're just too costly to be customized. And I think this is where open banking and other opportunities, especially with the emergence of technology that's going to enable more customization and experience, it's a great opportunity to sort of marry these together. But do you have perspectives on, I don't mean to belittle the feeling that it's a good feeling to be inclusive, but there's also a bottom line involved. And it takes investment, and it's sometimes difficult. How do you see the opportunities for these different companies to bridge that customized human interaction gap while still maintaining profitability especially in a difficult time?
No, it's a great question, and I think it's about phases where it really requires a high touch environment, and then when that trust is there, how you maintain it. So just to give you an example outside of financial services, I recently transitioned to a product called Superhuman. Do you know what Superhuman is, Deb?
I don't think so.
So I have no association with Superhuman. It's just something I've fallen in love with. So this is why I think it's a great example. It's a new email software that basically aims to transform your behaviors around email. So it's not just about improving the efficiency of email, it's changing your habits that you don't like. That's what Superhuman wants to change. And what's really interesting is when you sign up to this product, you can't actually buy the product without doing a half an hour one-on-one tutorial with someone from that team, where they take you through and they really try to understand your email behavior, and then they're giving you all the shortcuts and things that will break those habits that you want to change. And then you have a personal rep that you, at the bottom of your email, if you have a question or there's something you're struggling with, you literally message them, and within a couple of hours, they come back with a response. Now, that's what I'm saying, like that kind of high touch culture you couldn't sustain over time. But the fact that they spend half an hour with you trying to understand who you are and what you're struggling with in your life is so valuable, because then they know who you are as the customer. It's not like saying we should check in every single month. So that's what I mean, is like it's how you find these high touch points of interaction that really create trust, facilitate trust. And what's interesting is it is email, but in many ways you're being very vulnerable with that person, right? You're saying, I really want to break my 8 p.m. I pick up my phone habit. How do I do that? And they have a suggestion for that. So it's these high touch upfront interactions that allow you to know who that customer is. And then over time, how do you scale that? Because obviously you can't have that kind of level of interaction when you have millions of users.
Right. But there are lessons to be learned from that. With trust as the foundation, you then can spiral into loyalty. You can spiral into, more customers, because word of mouth is so important to companies. So again, it goes all back to that fundamental view of trust as that, it's the kernel that powers everything else. And I just noticed yesterday alone, I was caught in the chatbot circle where, you're talking to a chatbot with a name that sounds like a human. And at the end of the day, you go through the emotional cycle of sort of shaking your fist at the app because you can't get the answer you want. And then you start saying something like, what would you like for lunch? You just start playing with it. You're like, how much did they program into this app? So it becomes almost humorous at that point. And you also miss the point of the actual human interaction. So all that aside, with trust as the fundamental piece of every interaction, whether it's financial services, human interactions, especially, again, in light of such change this year, I just want to leave a few minutes, and I cannot believe the time has flown this quickly, and this has just been so much fun for me. So thank you. Help me understand, help our listeners understand, what does the horizon look like? What are you focused on? What's the next area of interest that we should all be keeping an eye out for as businesses, but also humans?
Yeah, it's a great question. I mean, going back to the app, the thing that is the lesson from the app is expectation setting, right? So trust breaks down when you set a really high expectation of what this thing can do, and then you're just sitting there frustrated. So this is other advice I have for entrepreneurs, is we often don't think enough about the expectations that we're setting and whether we can meet those expectations. To answer your question, though, if I think about the future, and I think the future is very hard to predict, but let's say the next 3 years, I have been tracking in my work this transition, this evolution of trust. So if you really zoom out, and this applies to financial services, it's actually the best example you can use. You can see that through human history, we've gone through 3 major chapters in trust. So the first period was all about local trust. Trust, and particularly banking, was with people who live within close proximity. It was about your personal reputation. Now, coming back to efficiency and scale, we institutionalized that, right? We put the financial institutions in the middle. We swapped bartering for money. And that was the institutional phase of trust. Now, what technology wants to do is it wants to take that trust that was very hierarchical, that was very top down, that was very centralized and controlled, and it wants to distribute it through networks and marketplaces and platforms. And you can look at so many different examples, from micro lending to crowdfunding to peer-to-peer lending to cryptocurrencies to all kinds of new innovations on the blockchain. And at some level, what sits underneath them is this idea of distributed trust. Now, the big challenge and the big opportunity, and this is where I think people sometimes, when I talk about distributed trust, they think there isn't a role for the institution, there isn't a role for the center, and that is not what I mean. There is very much a role. The challenge is, how do institutions adapt to these new dynamics where people do want these closer interactions, they do want value to flow in new ways. And the challenge for the platforms is, how do you create a social safety net? How do you create customer support? Because when things go wrong, and they do go wrong, people need to know who is accountable, who is responsible, who do they call. So this is the transition where I think the last 10 years, it's really been focused on platforms and sort of removing the institution and the middlemen and decentralization. And the next 3 to 5 years is actually about finding the right hybrid, where we unlock the massive potential of all the technology, but we don't forget the human component of empathy and integrity and accountability that essentially is what people want wrapped around financial services and money.
Fascinating. Love this topic. Have absolutely loved talking to you. It's been my pleasure. Really appreciate your time and your mind share. And with that, we will transition to Ian O'Sullivan, who's going to bring us through the 3 demo pitches. Thank you so much, Rachel.
Take care, Deb.
Thank you, Debbie, and hello, everyone. My name is Ian O'Sullivan, and I'm the European lead for Mastercard's Start Path program. As Debbie mentioned, I have the pleasure of introducing 3 fantastic Start Path portfolio companies that have sustainability at the heart of what they do. First, we'll hear from Helena Mueller, the co-founder of Doconomy, who'll share how they are helping banks and their customers become more eco-friendly in the choices that they make in how they spend their money. Over to you, Helena.
My name is Helena Mueller. I'm co-founder of Doconomy and I'm leading the global rollout of Åland Index Solutions. I will share with you today a story about an innovation in the intersection of finance, technology and sustainability. At Doconomy, we believe it's time to connect consumption to the impact on the planet. We're in the midst of a severe climate crisis and we all need to act, and we need to act now together. People across the globe feel disconnected. They do not know how their daily lifestyle actually impacts the planet and the climate. That's why we developed the consumer-facing solution Do, the world's first mobile banking service for everyday climate action, and introduced it to the market in Sweden in 2019. The solution actually helps calculate, track and measure every purchase you make, also showing you the carbon impact from these purchases. The solution is actually built upon ESG data provided by S&P Global and S&P Trucost. It's a real-time update index that actually helps you see the impact that every purchase you make and what it has on the planet. We develop personal carbon management tools to help consumers track and measure, reduce and compensate for their daily lifestyle. We also license our service and offer an easily reachable API that we also offer together with our partner Mastercard, and we're live in the US, in the Nordics and also in Italy. Users actually say that our services really makes all other banking services irrelevant, and also that our service helps them manage their private economy more wisely. Our overarching goal is to reach 500 million people by 2025 and to help them reduce, on average, 2 tons in carbon emission reductions each, equaling 1 billion metric tons of carbon reductions. We also want to be part of driving capital to the solutions where it's needed the most. We're a small company acting from up in the Nordics. That's why we also have to stand on the shoulder of giants to reach out. So we partner with S&P Global, with Mastercard and UNFCCC to really scale our services on a global basis. I now invite each and every one of you to be part of the movement and to also be part of driving the change needed so that we all can offer a sustainable lifestyle for every person out there. Thank you.
Thank you so much, Helena. And let's stick with the previous theme of trust. So I would imagine that data in a solution like this is central to creating trust. Can you please elaborate a little bit around the intel inside the Doconomy solution?
Yes, absolutely. Thank you. So, of course, trusting the data in a service like this is key. And that's why we've partnered with S&P Global and S&P Trucost. And we offer gold standard leading ESG data that's actually used by the financial service industry themselves. And the data set actually covers data from 15,000 companies globally, covering 99.9% of global market cap. It's robust, it's reliable, it covers company data, supply chain data, and customer usage data. And that's why we are able to also develop a very engaging service.
Yeah, thanks a lot. And maybe from a value perspective, could you share, some of the results that you've seen or your clients have experienced across the globe when working with Doconomy and your solutions?
I'd be happy to. So we're live with 6 banks in 7 markets. Our customers actually see this as a customer acquisition engine. One of our clients adds 10,000 new customers on a daily basis to the service. It's a growth engine. It actually drives volume growth, new account openings, and it's actually also engaging their customers. So Bank of Åland, who's been live for 4 years, their total customer base, actually there's 20% of their customers that claim that this has helped them change behavior and also reduce carbon emissions.
Thank you so much. And just maybe, Helena, I'm sure that there are people that are tuning in. You'd mentioned you're live across 6 markets. Maybe just very briefly touch on where Doconomy is actually currently available and can be deployed immediately.
Well, so the service is already accessible on a global basis, but we're live in the Nordics, so Denmark, Finland, Norway, Sweden, and we're also live in the US, in Italy, and actually also on Sri Lanka. We will soon communicate our next customers in Germany and in France.
Thank you so much, Helena. So now we're going to switch our attention from the Nordics to Nigeria, and welcome Jehiel Oliver, who's the co-founder and CEO of Hello Tractor, a company that's supporting sustainable farming in Africa. So you can take it away, Jehiel.
Hi, my name is Jehiel Oliver, and I'm the founder and CEO of Hello Tractor, the largest agricultural equipment marketplace in the emerging markets, with over 3,000 tractors and combines serving over 500,000 smallholder farmers. Hello Tractor came into the market just over 5 years ago to provide services to a much needed population of smallholder farmers who are overwhelmingly women reliant on manual labor to prepare their land. Because of demographic shifts, this labor is oftentimes unavailable, and when it is, it's 40 times slower and 3 times the cost of tractor services. Tractor owners, for their part, need technology to become comfortable with deploying their equipment to these geographically dispersed communities of farmers in need of these services. So Hello Tractor came up with a solution to this problem. We developed a monitoring device that fits onto any brand, any class of tractors. We then developed apps for tractor owners to manage their equipment, their drivers' usage of their tractors to avoid fraud and mismanagement of the equipment. And then, of course, a marketplace where tractor owners can connect with community-based agents using the Hello Tractor booking application to organize and book services for farmers in their community needing the same services at the same time. By grouping these small farmers together, services can happen at economies of scale, delivering profitable opportunities to the tractor owner while delivering a high impact service to the farm communities. Most recently, we partnered with Mastercard to develop a pay-as-you-go product that will facilitate additional credit going into these low-income communities. For the first time, entrepreneurs can access loans on a pay-as-you-go basis to service smallholder farmers, thereby increasing their income while delivering these value-added services. At the core of this solution is IoT technology. The ability to track and remotely lock assets is a huge de-risking factor. Also, collecting data in real time on asset usage, will allow banks to make smarter decisions on who to lend to while better managing loans once they're made. Join us as we deliver this solution to smallholder communities across Africa and the world. Thank you very much.
Thank you very much, Jehiel. We have a few questions for you. Let's start with, ensuring reliability. So how do you ensure reliability of services between tractor owners and farmers?
Yeah, thanks for the question, Ian. So we start with, for every finance tractor, the owner of the equipment receives a route plan optimized to their equipment and the implements that they have to service the farmers in the market. And with that route plan, along each point, there's a designated agent based in the community organizing farmers to receive services from that tractor owner. By doing that, we ensure that equilibrium in the market is maintained, and tractor owners, before the season even begins, has a fully booked business for their equipment, while ensuring also that farmers across the communities along the route are fully utilizing the capacity of that tractor once the piece of machinery goes into the community.
Yeah, thanks a lot. And what about maybe other services? So what other wraparound services can you offer to your farmers to help them, I suppose, be successful or be increasingly successful in what it is they're doing?
Yeah, so as you may guess, mechanization is not a panacea. However, it does represent about 50% of the yield gap for our farmers. That remaining 50% is related to not having the right fertilizers for their fields, the right seed varieties, crop care, irrigation. And so what we've done is, for all of our booking agents organizing farmers along these routes, we're offering these booking agents training over our digital application on everything from soil management to picking the right varieties based on the geographic and climatic factors that those farmers that they book on behalf of operate within. With that information, that booking agent can then provide step-down training to the farmers that they're booking tractor services from, giving insights to those farmers and access to those inputs through partners like input providers and irrigation service offerings. It also opens up new opportunities for the booking agents to earn commission as they sell those other value-added inputs.
Yeah, thanks a lot. And I know you've learned from experience in this. I read recently that you'd brought in actual tractors from AP. They didn't quite translate from an African perspective, but and then you switch from hardware to software, etc. So you've learned, you have the scars. Maybe a very quick question to end. You're live in Africa. You talked about bringing this sort of solution to the world. Where next geographically do you hope to expand into?
Well, we're really excited about the 13 countries in Africa that we currently operate in. We want to continue to grow the number of tractors and combines on our platform to service those markets, while bringing on new farmers to ensure that all smallholder farmers willing and able to pay for services have access to those services. Beyond that, we see Asia as a high growth opportunity. We'll be starting in Thailand in the coming quarter through some tractor manufacturer relationships that we have there, along with other dealer partners that we have in the country. But we're also excited about markets like Pakistan and Bangladesh, where we have really strong partnerships selling our technology into the market to make sure mechanization is available to smallholder communities. And so that with that growth potential in Asia, I think that'll keep us busy into the foreseeable future.
Well, I'm sure there'll be many on this session that we'll be delighted to hear about your growth plans across AP. So look, continued success to you and the team. Thank you for joining us today.
Very much.
So finally, for now at least, I'd like to introduce Gerrie. He's the founder and CEO of ZigZag, a software platform and logistics network that helps retailers manage returns globally. To tell us how, it's over to you, Al.
ZigZag is a software as a service platform to help retailers manage returns globally. Returns are now so important that most buyers check the returns policy before they make a purchase, meaning that returns are now more important than price, and around a third of shoppers are buying with the intention of returning a product. And the market's growing. In fact, returns are now growing faster than e-commerce and increasingly becoming a major pain point for retailers, and free returns are now such a big thing that more than half of retailers offer them. But of course, there's no such thing as a free return. Buyers are now shopping from home more than ever, and it's likely that even after COVID, there'll be a permanent shift towards online shopping, which means that online returns will continue to grow. ZigZag's mission is to help cut costs with faster refunds to get stock back in the supply chain more quickly, and the customer experience is key as we increase sales and profitability and improve sustainability. Customers want faster refunds to a local returns address, and returns on the ZigZag platform take less than 60 seconds. Customers are directed to the returns portal through the retailer's website, and they can log in to see their order details, select the item they want to return, choose the reason for that return, and then choose between refunds or exchanges. And if they choose exchanges, we can offer other sizes or colours to help save that sale. The portal is available in 35 different languages, and customer questions go straight through to the retailer's website. Consumers are given a choice of parcel shops, post offices, lockers, or collection from home, and many returns can be paperless as well, and we offer free returns as well as paid returns that can generate QR codes or printed labels together with packing slips and customs information so that customers can get text messages showing them where they are in their returns journey, and they can continue shopping on the retailer's website. ZigZag offers hundreds of carrier services in over 130 markets using local heroes to create a global network. We can scan, grade, recycle, fulfill or donate goods, and we help clear customs seamlessly, but consumers don't have to type anything. The biggest single question a retailer receives is "Where's my refund?" and ZigZag's been able to cut customer contact by 40%. Tracking events can push refunds to buyers on the first scan if appropriate, and we have a number of integrations into leading sales platforms and a simple API. We're measuring return rates by products, country or brand to help e-commerce and customer service teams understand the impact to the P&L, and we use Power BI to deliver daily reports straight into your inbox. Our clients include major retailers and 3PLs from all over the world, and ZigZag has been recognised globally for innovation 5 years in a row. Thank you.
Thank you so much, Al. I have to start with maybe asking you to explain something, one of the lines you opened up with, which was that returns are now growing faster than e-commerce. Can you help us understand that line? What's happening?
Absolutely, yeah. Thanks, Ian. Yeah, so certainly COVID has really created more people to go online and shop more than ever, but return rates are on the increase. And so as e-commerce grows, return rates will grow, but baskets are now getting bigger. People are buying multiple sizes, multiple colours, and they're buying with the intention of returning a product because they can't use fitting rooms. So there's a real shift and a whole demographic of new buyers that are coming online for the first time that's pushing up return rates.
Okay. I know there will be some on this line too. You know, it's obviously, you know, me sitting in Dublin, we kind of hear it every day, but just maybe help us understand the impact on retailers that surrounds Brexit. You know, how are you preparing for that? How are you working with those that may be affected?
So a number of retailers are really struggling with Brexit, so they're not prepared with the right data that they're going to need. And after the 1st of January, retailers are going to need to fill out customs declarations to get goods back into the country. whichever direction you're going in. And the problem with that is that a consumer cannot be expected to fill out one of those forms accurately. So you need software that can do that, really. So we're filling in not only the customs declarations, but the creating paperless labels for consumers to enable them to get returns back seamlessly without filling in any paperwork. So it's 4 clicks and you can complete a return.
I'm sure that will be welcomed by many. So Al, thank you so much for joining us. Much appreciated.
Thank you.